Today we're going through another trading tutorial that might help you further with your future trading success. We're going to take a look at the Fibonacci extension level. Many of you either don't use it yet or aren't exactly sure how to apply it. And please don't confuse it with the Fibonacci retracement. The Fibonacci extension is a trend-following tool that allows us to determine after a trend break where a possible price target could be. For example, let's look at Ethereum. After we broke the trend here following this long downtrend since December 24, which I had already marked in my older videos and also shared on Telegram, we now have this possible price level up here, where, for instance, we could sell Ethereum or open a long position. And that actually worked out wonderfully. And in connection with my video where I also showed the sniper entries, where you apply exactly the same method and actually had a 0.5 sniper entry here, if you really apply it like that, you could have made a possible profit of about 111% to 121%, all without leverage. But that's not really my point right now. I'm not trying to show you the video again. If you haven't seen it yet, check it out. The sniper entry video is super exciting and works every time. This is the video, the simplest trading strategy, and you're not using it yet. I'll also include it a bit in this tutorial, but my main point is that you understand, with this price level I showed in that video, just how valid it really is. Both the Fibonacci retracement and the Fibonacci extension tool have their justification because of how valid these levels are, as price often reacts when it reaches them. This is just a small example with Ethereum. But now I want to show you the validity of this. You can apply it on any time frame. But now I want to show you something that very few people do. And for this example, I'll use the weekly chart of Bitcoin because I actually sold part of my Bitcoins at the top, around 123,000 US dollars. I didn't do that because I told myself, hey, okay, we have a high price now and I'm going to sell. No, I'm going to show you something now. Let's draw the Fibonacci extension level. That means in this case, I take this bear market low from February 2020, we all know what happened here, to the bull market high, and then pull it back down to the next bear market low. And what happened here? In this price range, just as we moved above and over this Fibonacci 1.618 extension level, I sold some. Last week we went a bit higher again, but just so you can see how valid this is. Example 1. This doesn't mean we can't go higher, but for me, it's a point to take partial profits. Let's move on to XLP. I want to show you the same thing here as well. Who would have thought that we would enter exactly into these price levels here and react again? And here as well, if I now take the Fibonacci tool from the year 2020 out of the bear market into 2021 into the bull market, and then again the lowest level, I'll show you in a moment how to draw this exactly, take it here from the next bear market. You can really see how well it reacted here. The first time with XLP, I missed exactly this part here, selling at the 1.618 level. But I did it at the next level, where we had the 1.809. Of course, you have to draw this in precisely as well, but just as a little proof. Here, right at the price peak of XLP, you can see that I sold up here where we had the current XLP top. And I really did that solely based on the Fibonacci extension level. How do you apply it? How does it work and which settings do I use? That's what I want to show you now. Let's start by looking at the settings of my Fibonacci extension. Where do you find the Fibonacci extension? If you go into the third section in TradingView, the very first thing you have is Fibonacci retracement, and then you have trend-based Fib extension. And this extension is exactly what I want to show you now. I'll show you in a moment how to draw it in detail. But first I want to show you the settings I use and how they work very reliably. Let's go to the settings here, because for you it would look completely different. If I now go into the default settings, the Fibonacci extension would look like this for you. As you can see, there are always a lot of colors and lines on the chart, which isn't really ideal for practical use. And not all the levels are included as they're typically used in practice. That's why I'm going to show you my settings now and you can save them for yourself. Now I'll go back to YouTube. I've basically turned everything off and I've only included the 1.41, 1.68, 2 and 1.809 levels. All of these are marked in white except for the 1.41, which is in red. I'll show you in a moment why that is. You can save it here by clicking Save As, entering your name, and then you'll have it saved as a template down here. Once you have it set up like this, you'll also see this little marking here that I've added, and you'll have these levels. And what do we do with the Fibonacci extension? As soon as we see, like here, that we've had a very strong upward trend which then goes into a correction, and after this correction moves into a recovery, I want to know, where could the price go next? Based on these Fibonacci extension levels. And as a small example here, which I just quickly drew in earlier, we can see here, just like before, from the impulsive upward trend, a stronger correction, and then the next trend moving up. You can see very clearly here that the main rejection actually happened at the 1.618 level, but also at the 1.414 Fibonacci level. And now, of course, the question arises, okay, when should I actually enter? Because I can see where the price might go. Let's say you're a spot buyer. Then you have the option here to sell parts of your spot holdings, just like I sold part of my Bitcoins and XRP. But if you're a trader, you'd like to take advantage of an opportunity here to enter perfectly as well. Let me go back to my Fibonacci retracement as a small example in case you don't know the video. That would have been the possible entry point. You could have entered at the 0.5 Fibonacci level, but also at the 0.6. This means you could have run a trade here from 2.79 up to around 780, possibly up to 860, or also used it for spot purchases. Really, take a look at my video on this. It works every time, so you understand it here as well. I just want to show you one possibility. Personally, I trade this differently. So I always take my take profits here at the 0 level. But for people who do this more long term, or like me, have swing positions where I want to say for the future, hey, these are opportunities where I close my swing positions or make spot sales. The Fibonacci extension level is incredibly brilliant. How do we draw this now? The important thing is that, for example, we use this in a downtrend. When we then have a trend reversal, when it goes from a bearish trend to a bullish trend, we actually use the next higher low to identify a possible trend continuation and determine its price targets. Of course, this works both bullish and bearish. For example, we can now go to the 4-hour chart. We'll also take another look at the 4-hour chart to see where, after this trend, we had a possible price correction, like in this case. And that, for example, happened here. You can actually continue this as well. That doesn't mean it always has to be so long-term like I just showed you. For example, I can also go in here. We had a massive impulsive downtrend here, which was then followed by a recovery. And if you now draw this in from the high to the low and where the recovery then stopped. But we only see this with a delay. We don't know exactly when it will stop. But when we see it, okay, where is our price target then? Where could the price go? No matter how bullish you are, no matter what you think, if you look at the chart neutrally and see something like this, we have a trend reversal. So we've broken the trend to the upside and really confirmed it. If we look at this now with AVAX or with NIA, it's actually a confirmed trend break, not just in the line, but also in the price action. Then you really should try to look at the chart neutrally, because what happened here with this trend break? We entered this price range here and perfectly triggered the 1.618 and 1.809 levels. That means we would have reached excellent price targets for the short position here. Or maybe if you say you want to buy a little spot and get started. The price can continue to go down, as you can see here as well. We now have a long consolidation right in this area here. But even here, when you had this break, as a small example, since I mentioned it earlier, where would you enter here with that other video I showed you? Here you would have the opportunity to enter at the 0.5, 0.618 levels in these areas here, and you would actually catch this entire downtrend here, provided you are a swing trader. But what I really want is for you to learn, after corrections, after a trend reversal, where can prices move to? Something you might not notice or expect beforehand, but which actually does happen. Take a look at this on your chart, draw it in like this, and try to replicate it for yourself with different coins and on different time frames, just so you can see that it really works. And I know for many people it's not ideal to keep positions open for such a long time, but there are always opportunities to enter incredibly good swing trades. Just like I did in this case with Ethereum after we here also. Yeah, I mean, personally I entered a bit earlier, but I scaled my position here again and also scaled further up, but in the end it pays off. But this position here, for example, has made an overall profit of around $20,000 because I scaled it exactly according to this Fibonacci. I did enter a bit earlier as well, but I scaled using the Fibonacci levels here and gradually, and you can see here, if I go back now, take another close look at these levels here. Yes, with Ethereum, what's included here? And then I want to show you again where I actually closed a bit of my position so I could realize some profits so that now nearly 16,000 have actually been realized. And these are really levels where I say I don't just do this on a whim, nor do I scale my positions just because I feel like it. No, I really do this based on these Fibonacci levels at this peak. As you can see before that, I also closed a bit in these two price ranges, scaled in again during a correction, but then took some off the table again at the top. And that actually turned out to be a good move because currently we've already had a correction of about 12 to 13% in the meantime. To wrap up, let's take a look at another coin, as I mentioned. Let's use AVAX as an example. AVAX is also very interesting, a very volatile coin, and it's actually perfect for applying this strategy. We'll also use a smaller time frame. Now we're on the 2-hour chart. Earlier, I always showed you the daily and weekly charts. 2 hours, 1 hour, it doesn't really matter. What do I want to show you? Massive impulsive moves, just like we had here. For example, let me use this as a small example. Here we had a clear trend break to the downside. If I now draw this upwards, where we then corrected again, that would have been a price target for AVAX in this case. Meaning we could go from around $25 down to 17, 16 or 15 US, but also possibly to 18 US. And these are not coincidences, as you can see here, that the price actually reacts so well at this point. The 1.414 level is not something that is typically used for taking profits, but I have found for myself that it works wonderfully. The 1.618 level is a very valid level for taking profits, or for example for buying or selling depending on the trend direction, or the 1.809 level or the 2.0 level, perhaps for taking the last profits or using it to make new spot purchases. But there is no guarantee that it will stop here. These are probabilities that we are using here. The price could have gone much further down, but as a small example, here we broke through this downward trend, targeted the price level perfectly, and then rose again. Let's maybe take a look at another coin to wrap things up. Let's take Doge. Let's also look here for trend reversals to see what we have. Here we have a downtrend, and here we have an uptrend, an impulsive rise followed by a small correction. And I want to know, where could the price go? We're going to test that now as well to see if we're right or if the Fibonacci was or is correct here. Let's go into this area. Here we have the low, we go up to this high, look for the next low, and then as you can see, these exact areas were targeted. And this is also a good example, we can of course rise even higher. But overall, this price area was already very good. If you entered a long position in this area down here, here too, we can use my previous tool for the sniper entries. That points to 6.8. That would have been the valid entry here, 5 would be a stop loss, but you could have taken all of that up with you. 15-minute chart is a small example as well. That would have been around 20% without leverage, which you could have realized here. So which indicator, as I showed in the last video with the sniper entries, I'll go into that again, about the script, so let's go in here. This is swing levels and liquidity by Leviathan. And it can show you, if you might not see it that clearly on the chart yourself, just go into my daily chart. Where are the swing high and swing low levels? And you can see that based on these points, and you could actually apply that for yourself and use it to determine where the price might go if we have a high here now. This is our last low, and where was our next major high? We can use this as a small example. I think this will be too strong here. That would go into the negative if the price movement is too strong, but in this case, we went in here. We haven't targeted the price level down here yet. What was targeted here? And maybe just as a little conclusion about the Fibonacci levels. A lot of traders use this. I don't use it myself, but the one level is very, very interesting for many who say, okay, we'll take an entry here and I'll use a take profit here. Now, womit jest die buyfähig. And the one level, as you can see here, was targeted exactly. This is just a little closing info. Then there was a bit of a correction because profit taking often happens at the one level. Overall, we would still have some room to the lower levels, but it actually seems now that we are moving back into an uptrend because we are making higher highs and higher lows again. A small possibility now, if we take this as a little example, where could the price go from here? If we take this high and this low here, it would be around 39 to 42 or 44 cents. We now have a daily chart here and also 47 cents. That would be what we had back in December 2024, and here too we have some very valid price zones, if Deutsch should actually rise further in the subpool market. Exactly. I hope you understood that. I would be happy if you subscribe to my channel. Let's get a few more subscribers. Check out my videos. Above all, I also have playlists, 100% passive income on autopilot. Super exciting, extremely popular with the community because some really brilliant low-risk trading bots are used here. You can create them yourself, you can create them for free and easily replicate them. But I also have a Bitunix grid rating bot live test with an incredible amount of information where I regularly do it live with you on YouTube. That's why I would be happy if you maybe subscribe to the channel, leave a comment here and see you next time. Ciao, ciao.